Hey everybody, welcome to my new trading series called Liquid Options TV, where each and every week I'm going to bring you a new episode with current and actionable trade ideas for today's ridiculously crazy market. So be sure to subscribe to the channel and also click that little bell so you don't miss any of these trade setups or these trade ideas. So today we're going to talk about Facebook and an earnings trade, and I thought it was pretty current because today Zuckerberg went in front of Congress, and basically he testified with all the data leak stuff that they had these issues that the stock has fallen off a cliff. We're going to look at that chart in a second, but basically here's the headline: Zuckerberg wins on Wall Street. And let's take a look at the stock itself. You can see we had a big candle today. We closed up about 4.5%. It was up about 5% at one point. You can see it rallied right up into that 20-day moving average, but it did break the recent highs. Now, just from a kind of intraday perspective, the stock did close, before the hearing started, which was about 2 or so in the afternoon. The stock was up a couple, like maybe 2.5%. But really, that's not my concern about what happened today. What I want to talk about is what's going to happen over the next 2 weeks. So you can see on April 25th, earnings are going to come out after the bell. So let's zoom out just a little bit, and I want to just kind of look through the past 4 earnings cycles, and we can go back before in your charts if you wanted to, but there's this little bit of a pattern where a week or two before earnings, Facebook tends to rally. So here's earnings here. We had this kind of big rally. Whoops, I mean to do that. We had this move. Okay, this earnings cycle, we had a little bit of a dip, but still ultimately rallied up into earnings. And then here again, we had a dip and rallied into earnings. So what I like about this pattern is pretty consistent rally into earnings, and we're going to talk about how to play that. But ultimately, when this stock rolled over here, we're at some really extreme lows. Now, earnings plays are always kind of tricky, and you got to be careful with how much you risk and all that. But let's just go back to the back test of what happened during this earnings cycle. So let's go. I'm going to go over to my CML trade machine. I'm going to put a link in the description if you want to get more info about this software. Be sure to check that out. But in here, you've seen me use this before with backtesting, but in the Pro Scan feature, I'm going to go ahead and put in Facebook, just the ticker symbol, and we're going to look at some of the earnings strategies. And you can see the ones that come to the top are 14-day pre-straddle earnings. 14-day, that's the one I'm going to be looking at, the 14-day pre-earnings momentum long call and the 7-day pre-earnings momentum long call. So basically, the pre-earnings straddle is 14 days before earnings, which that puts us at tomorrow, because today's the 10th and earnings is the 25th. So you got 14 days. So if you were by a straddle, you can see some pretty decent returns. The average return was 13%. It's been 4 winners the last earnings. And basically, the idea of the pre-earnings straddle is that you buy a call and a put right at the money, and you pick the expiration week, and typically the implied volatility is going to rise into earnings. So you're going to make a little bit of money on the call and the put if the stock chops around, because the earnings or the implied volatility will rise. But also you're semi-protected, because if the stock actually rallies like crazy, you're going to make money on the call and you're going to lose money on the put. But again, both options should have a little bit of an implied volatility rise, and any directional move should be offset by the other option. The other trade that's been doing well is just straight up buying a long call. So let's look at the 14-day pre-momentum long call. I'm going to click on that, and they're looking at buying a Delta 40 call. That's something slightly out of the money, and typically this is the option that is in the week of the earnings. So we'll have to look at that. But basically, this is what I'm going to be looking at doing tomorrow. Is I may do the straddle, and I may buy the long call. But I wanted to bring this to you guys today because it's in the news. Earnings is coming up, and again, the pre-earnings plays have been pretty good for Facebook in the past. Now, once earnings happens, the key to all 3 of these, if you decide to take any of them, is to close the trade before earnings. That way you're not actually taking the earnings risk. So again, this is a pre-earnings trade. You open it before earnings comes out, and then you close it before earnings comes out, with the idea that you could try to get some profit. Now, there's still a lot of news going on. Let's take a quick look at the S&P. We'll look at the SPY real quick. Part of the reason the stocks rallied today is because China came out with a relatively positive tone with the tariffs and all that stuff. So if the market can kind of get going here, I think those pre-earnings calls are going to do pretty well. So the market did not do as well as Facebook, but it was up 1.5%. We have not cleared the congestion zone. So I'm still a little bit on the fence. If we roll over and die tomorrow and we start to break lower, then guess what? I'm probably not going to do the pre-earnings call. So we still need to be alert and look at what's happening in the market. So that's it for the first episode of Liquid Options TV. Be sure to subscribe to the channel and check the description if you want to get more about CML and some of those earnings trades. I'll see you next time.